Hello traders, Gary Wagner here, approximately 10:45 in Honolulu, 4:45 in New York on Tuesday, 21st day of January 2014, and this is the daily report for gold and silver. We do have the precious metals trading under some pretty strong downside pressure, with the metals down across the board. First to gold, as you can see, current print on the screen is about 1241. 1241 puts it off about $12 or $13 on the day. Now the low is 35.50, the high is 55.60, and as I said, it's currently trading off about $12 or $13 on the day. Silver trading off about 41 cents on the day. 1989 current print, 66 is the low, and 2038 is the high. We'll talk about silver towards the end of the show. Traders, there's no doubt we have been under pressure on our most current trade, in which we went short at 1245. It was my belief and my contention at that point that we're going to run into some pretty serious resistance, which should push prices lower. This is, of course, all on a technical basis, and what I'm talking about is our long-standing resistance line. We'll look at that in a second. 60-minute chart, the one thing that really pops out at us is now this double top that we had roughly at about 1255, and there's no doubt we made a higher high. If you look at these recent highs here, we've had consistently higher highs. However, as we move to this last one, of course, we ran into some pretty strong resistance, and as I said, that resistance is really based upon a long-standing trend. Now, from the 60-minute, I want to go to a 240-minute chart. And the tops that we were looking at, the three tops we're looking at, are here, here, and here. But when we pull this up, what we see is a double top, which is really this top here and this top here. When we look at it that way, this top absolutely was a little bit higher. But we're going to use this chart in a little bit to talk about different areas that we'll look for in terms of our exit strategy that are based upon different support areas that gold might find. We'll come back to this chart in a little bit. We've gone ahead and pulled up our half-a-day chart. It's currently in standard candlestick format. And we've got our series of different resistance lines all the way up to about 1374. When we look at this chart, it's quite clear. A couple of things pop out at us. And the first of which is this 1253. This was our first level where we started to look for resistance, of course, and it exceeded it as the market came down from about 1360. This is where it came down to 1186. But just prior to that, it made this one attempted rally here, and it stalled just above this particular resistance line. However, when we look at the last two attempts, which is right here, you can see that it's absolutely stumbled against that particular resistance area. Our next line is 1245, and that, of course, we have currently just gone under that, trading at about 41. And our next real level that we're going to have to look at, if the market does continue to trend lower, is going to be 1227 to 1221. Traders, the beauty of technical analysis is that it tends to filter out a lot of the fundamental noise, but more importantly, take the fundamental data and market sentiment, kind of combine it, and give us a interpretation of these facts through the language of numbers. And the reason I bring that up right now is we have been talking infinitum, almost too much. I'm sure my subscribers almost got sick of the talk about this particular long-standing resistance line. How by looking at the angle up here, drawing it forward, we were able to calculate a top here, calculate a top here. We attempted to calculate a top here, and in fact, we might be correct on that, because let's go ahead and blow up this particular chart, and then we'll scale it over so you can see just what we were looking at. But this is that long-standing resistance line that I've spent so much time working with. And when we look at it from this angle here, here, and then we carry it down, of course, this is extended way back here, but there is no doubt now, when we look at this, at least for now, it might not continue in this direction, but here's what we've seen. We have seen, as this market came down and formed a low, It was unable to go past the resistance here. The next low was around 1250. It takes a stab and boom, it runs into some real resistance here. Now we had the market at what? 1186. It comes up and lo and behold, right at this point, we get the market stalling. We get that red candle. We have the potential for some downside in the market. And as I said, this was all technically based. And at the same time, it gave us some really, really relevant information, important information, useful information, and I think information that will make us money, most importantly. So all I've really done is gone ahead and compressed that chart back so that we can see the entire resistance line, the span of the resistance line right in here. And there's no doubt in my mind, at least for now, my sentiment is we were unable to take this particular resistance line out. We are probably headed lower. Now, in terms of where we're headed, that is the new $64,000 question. The old one was whether or not it would break through this point. I think we can see at this point, it's a little early to tell, but at least we see the market coming under pressure as soon as it hit that resistance area. If it takes another stab at it, so be it. But what I'm looking at right now is the conclusion of this fifth wave. I'm still looking at a washout. We had this long wave 3 down, no doubt. We had the ABC, and that was our wave 4. Wave 5 was a 1, a 2, a 3. We talked about the fact for 4 to be valid, it couldn't really go into the area 2, and that has held. That has held quite well, and now we're going to go into our final fifth wave. As I said, I think our fifth wave could take us down to the 1200 area. On the lowest scenario, maybe as low as 1250. In other words, a low below the low that we hit at 1181. And although it's very early to tell, the signs that we've broken down here, if we do get some downside pressure, we could have a dramatic fall in the marketplace, at least to equal lows, and at equal lows we would still get that bear market truncation, because the truncation is not referring so much to how many waves come down. In other words, the count 1, 2, 3, 4, 5. What it's referring to in terms of the truncation is the low that it hits as it compares to the low of wave 3. And a couple of things. Wave 3 cannot be the smallest of any of the impulse waves. And this on a bear count is one heck of a wave 3. Nothing's going to really beat that. We've got 4, so we've got 5. Now 5 is typically equal to 1. And so that's another way that we can look at or attempt to put some sort of model together. And the way we would do that is simply this. We go to find the low that we found on 1, take it to the top, and that gives us really our range. Okay? And then we can take this, because it's a scalable line, and then we can take the bottom here and then extract where that market would go. And as you can see quite easily, it goes well below 1150. So if this model was to play out, in other words, if wave 1 and wave 5 were to be equal in length, we could see this market move to easily the 1150 area. So that's another just kind of a quick down and dirty test to create a model. But what I want to do at this point is take a look at how it reacts at this point. If it continues lower, we have certain parameters and areas that we're going to look at. As I said, the first one is 21 to 27. Then we've got 1211 behind that, then the 1200, and then if it does break below there, at that point we can go into where the next real levels of support might fall into play. We are looking at our weekly chart now, and our weekly chart, of course, really only has our intermediate count, 1, 2, 3, 4, and this, of course, here is all part of wave 5. Wherever wave 5 goes, we'll take a look at, but it should at least, I believe, if it is truly a wave 5, to be a truncated, it should go around the area of 1186. Even as a truncation, it can be even higher. It could be 1201, it could be 1207. In other words, you can get a higher low on a truncated fifth wave scenario. So we'll have to see how this plays out. Traders, we're looking at silver, and I talked about this a little bit on our last edition of Chart This. I sent you the link for that yesterday. But the one thing is that we've had this silver market really in a sideways trading pattern. Although it's had a decent trading range, I'm not a day trader, I'm a position trader. So for a position trader, it would tend to kind of whipsaw us around, which it in fact has. But my sense right now is I would look for, I've talked about this many occasions, 1958 as being a pretty critical area. Markets hit a low, I think it was just above that, as you can see right in here. But see how the market reacts if it holds support here. If it cannot, the next real level is going to be testing these lows here and these lows here. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.